Welcome to etbfsi.com. Today we are joined by the chairperson and managing director of Power Finance Corporation, Parminder Chopra, also the first woman to head PFC. Thank you so much, ma'am, for joining us and for your valuable time.
Thank you. Thank you very much.
Ma'am, to begin with, the very first question that I'd ask you is our ambitious goal of reaching towards Viksit Bharat by 2047. Then comes the role of the power sector, and then comes the backbone behind Power Finance Corporation. Given such ambitious targets ahead, how are the lending strategy, being framed for PFC over the next 5 to 10 years? What are your benchmarks going forward, and how will PFC power India's growth towards Viksit Bharat by 2047?
See, if you talk of PFC, PFC is the one of the main funding institution for power sector. And of late, we have also been given the mandate to fund for the infrastructure sector. So, if I talk about the PFC role in the power sector, till now we have funded approximately 50% of the installed capacity, apart from supporting the transmission and the distribution sector, which is the last mile connectivity between the distribution companies and the consumer at large. So as of now, we have outstanding book of 5.63 lakh crores. If you talk of the PFC role, so PFC has been formed with an idea of, if you talk of 1986, at that point of time there was the ailing state electricity board, not enough generation capacity for the country, and that too the financiers were reluctant to fund for the power sector. So, apart from funding for the power sector, we have been partnering with the government of India for reforms, various reforms under the power sector. At that point of time, when the state electricity boards were bifurcated into different companies, it's the PFC along with the Ministry of Power have played a vital role. The various reform schemes have been introduced by Government of India of late, like RAPDRP, IPDS, and as of now we have RDSS scheme, which is there to reform for the distribution sector. We have seen that during the COVID period, when the liquidity was dried up for the power sector, the government has come up with the liquidity infusion scheme. After that, the late payment surcharge scheme was introduced by Government of India. In all these schemes, PFC has played a vital role in implementation of the scheme. So we are partnering, apart from the lender, being a lender, we are partnering with the central government in their various initiatives for reforming the sector. Going forward also, we are expecting that the same role we will be playing. The government of India has given a push for the renewable sector, and as of now, PFC is the largest financer for in line with the government of India objectives to fund for the renewable sector. We have been funding for the battery storage and the various other initiatives.
Sure, ma'am. It's about 40 years of existence, 25 years, I think you've also spent with PFC. If there's one stark contrast you would like to draw between early years and today, what has changed for the sector? And more importantly, help us look into what will your lending strategy look like for the next 5 years going forward.
See, I think now with the Government of India initiative, we have more and more participation from the private sector also, especially on the generation and the transmission front. Earlier, this sector was dominated by the state sector utilities, and now we are seeing that more and more. If I talk of the renewable sector, it is predominantly the private sector which has come up for installation of the solar and wind projects in line with the Government of India initiative. In the transmission also, a lot of privatization has happened, and now the projects under TBCB route are being auctioned and is going to the best whosoever quotes for the lowest tariff for the same. So this is one of the major shift. And now we are talking apart from the meeting the requirement and having more and more installed capacity to meet the overall requirement of the country, we are talking of the energy security and energy transition. So the government of India focus is especially on the geopolitical issue we have seen in the Ukraine and Russia. So a lot of focus has come for the energy security. And simultaneously, I think India is the only country who is working for the energy transition simultaneously.
Sure.
So accordingly, we expect that PFC will continue to play the vital role. And right now we are having 20 to 25% market share, and we expect that we will continue to have with more and more investment requirement in the country.
Sure, ma'am. I'll also talk about the secure NCD issue that we're here for today. Out of the 500 crores, how much, I mean, help us understand the allocation of the capital that will be generated. How do you deploy it?
See, PFC has come out with the five options under the current public issue of taxable bonds. These are primarily ranging from 5 years to 15 years tenor. Simple issuances of 5, 10, and 15 years, ranging from 7% coupon for the retail investors up to 7.3%. Along with, for the first time, the CBDT notified zero coupon bonds is being issued by way of the public issuances. So I think that's the main feature where the public can participate in the zero coupon bond. They need to invest at the discounted value of, if I talk of the retail investor, 50,780 rupees, and after 10 years and 1 month they will get 1 lakh. And this amount, the differential amount, will be taxable as the capital gain tax, which is lower than the normal income tax rate for any individual whosoever is there in the bracket of 20 to 30%. So with regard to the allocation, the base issue size is 500 crore with an option to retain over subscription up to 4,500, taking the issue size to 5,000 crores. And the allocation is not there any option wise. It is between the different categories of the investors.
Okay.
40% for the retail, 40% for the HNI, and corporate and institutional investors have 10% each.
Sure, ma'am. Noted. If I speak of FY26, one more quarter and we'll be ending it. Um, what's the target you're planning to meet as you end this fiscal year in terms of borrowing and lending?
See, for lending, we have been giving guidance for approximately 10 to 11% of the growth target, and we expect to meet that. And whatever borrowing is required to do the required lending, we will be doing. I don't think that there is enough liquidity in the market. We will face any type of challenge.
All right. Now that brings me to the interest rate environment currently. We witnessed about 125 basis of rate cut from the Reserve Bank of India. Brokerages say we might witness another rate cut in February 2026. From the PFC point of view, I'd like to understand how does such situation impact you in terms of NIM, net interest of margin, in terms of the balance sheet, in terms of your balance sheet, and in terms of the sectoral, the way interest rates impact the sector which is borrowing from you.
See, I agree that there has been repo rate cut, but that has not been translated to the market benchmark rates. We have been seeing the elevated levels in the market benchmark rates, and fortunately or unfortunately, PFC does not have any access to the repo linked rates. We have been borrowing from the market either through bonds or through term loans from the scheduled commercial banks. So we, if I say about our borrowing cost, that has not much impact when we compare it with the repo rate cut. On the other hand, the borrowers, whosoever are our borrowers, they have an expectation in the market. There is a narrative said that there has been lot of reduction by the Reserve Bank of India, and they are expecting us to lower
Yes.
our rates pending translation of those rates into our borrowing cost.
I'll also go back to borrowing from the bond market and scheduled commercial banks. For this fiscal, which has been beneficial for you? Where was the tilt towards SEBs or bond market?
We have always been raising funds from the mix of the
Okay,
bond market and the borrowing from the scheduled commercial banks. It's only towards the end of or the second half of December we have been raising more from the scheduled commercial banks to
okay.
meet our borrowing cost, because there has been volatility in the bond market.
Right. And ma'am, what's the trend do you expect going forward? Would you be going more towards, I mean, I understand you've mentioned there's a mixture and balance always, but looking at the trajectory, liquidity of the market, geopolitics around rupee, everything that's shaping the markets ahead, where are you going to be tilted more towards?
It's a very difficult question. I think with the infusion of liquidity, which is expected from the next week, this week onwards by the Reserve Bank of India, there is some easing of pressures on the bond market, and that definitely we will look for raising of money through bond market along with term loans.
Sure. Noted. Also, ma'am, what does the sectoral allocation for PFC look like? How diversified are you, and what are your plans in terms of diversification specifically? Where do you want to lend more? Where do you want to reduce your exposure? Uh, Strategy in terms of how are you going to go about lending in terms of sectors?
See, we have been funding for the different segments of the power sector.
Yes.
For as far as infra is concerned, our exposure is very low.
Okay.
So that we will be gradually increasing. But in the power sector, we have been funding to the generation, transmission, and the distribution. So our focus remains along with the government focus for the renewable and energy transition, but definitely we will be partnering with the government goal of energy security also, where the government has decided along with the renewable that we should be funding the thermal generation.
Okay.
So 80 gigawatt is planned. So a portion of our funding will go to the thermal generation and renewable also. And going forward, whenever nuclear projects are planned and DPRs are in place and their approvals are tied up, we will be looking for funding for the nuclear sector.
Noted. Ma'am, when you speak of infrastructure added to your list lately with the government, uh, does your role overlap with NAPFID? How do we look at it? PFC and NAPFID coming together to fund infrastructure? How do I understand this?
I think the looking at the huge requirement of funding for the power and infrastructure sector, all the financial institutions have sufficient business to grow, and we need to work together.
Sure. Ma'am, I'll come to RBI's project financing norms, the revised norms that became effective from October 1st, 2025. 3 months of going about it, how has it changed your project appraisals and risk assessment? How do you look at it and, its trajectory ahead? What has changed for you? How is it working out for you?
See, we have already been having, as per the terms and condition, we already have those terms and conditions like to have the requisite approvals, to have the land. Yes, the timing might have changed as per RBI guidelines, like 75% of the land should be there in the first place. So there may be the timing of the sanction may be delayed, but I don't think that on the overall appraisal system that's going to have any impact on, because it is broadly in line with the PFC's appraisal system. The impact definitely will going to come as the 1% the provisioning on the standard asset, but We are already following expected credit loss as per NDAS,
Okay.
and our average provisioning has been on the standard asset in the range of 1%. So on that front also, we are not going to expect that it's going to have any major impact on PFCs.
In less than a month, Honorable Finance Minister will be presenting her ninth union budget. Uh, what are your expectations for the NBFC sector, largest NBFC of the country, powering, the power sector, uh, important towards the goal of Viksit Bharat? What are your expectations? What are you looking forward from the budget 26?
As a head of the NBFC, I would always expect to have a cheaper source of funding for us so that we can pass on the benefit to the ultimate consumer and have lower power tariffs.
What are the biggest challenges in your, path when you speak of lending to the power sector? What is it that you have to be wary of going forward?
If you talk me about the challenges, then definitely the regulatory surprises and the asset quality. We have the lowest NPA, but definitely we have to be cautious enough that what we fund today is going to decide our future tomorrow.
On the Gensol crisis, what does such an episode teach us about the risk assessment? What would be your, takeaway from what happened and for the entire sector at large?
See, I don't think that there has been any lapses in the appraisal system, but if some individual, it's one of episode where the individual promoter has some issues. It's not about the sector, it's not about the segment, and I don't think that it is what you can say that overall industry or the segment is a non remunerative, and there is any challenges in funding of those type of proposals in PFC. I agree that we have to be more cautious. For PFC, we have taken delivery of most of the vehicles. It's only 30 vehicles, which were 30 crore worth of vehicles, which were not there. We had the hypothecation over the vehicles. But yes, whatever it has been done, we will try to have more control and monitoring, stricter monitoring.
All right. Thank you so much, ma'am, for your time and sharing all those insights. Thank you for
Thank you.
watching etbfsi.com.